All right, let's jump forward in time. We're going to look at a fascinating report that imagines what the crypto world looks like in 2026. And the big idea here is that the whole game has changed, moving away from just speculation to something much, much more real. So, let's dive in.
And this slide, right here, just nails the core concept. The past, it was all about speculative hype. Which coin was going to moon next. But in the 2026 reality this report lays out, it's all about tangible, real-world utility. The focus shifts from asking, what's the price, to asking, what does this network actually do? So over the next few minutes, we're going to break down the 5 key players that this report identifies as the leaders of this new era. And more importantly, we're going to explore the fundamental reasons driving this massive shift from hype to utility. First up, the economy's digital backbone. Look, just like the internet couldn't exist without its core protocols, this new digital economy needs a foundational layer. It needs a rock-solid, secure base that everything else can be built on top of. And that, of course, brings us to Ethereum. In this 2026 scenario, Ethereum isn't just a crypto, it's become the institutional settlement layer. Think of it as the new Wall Street, but it's all digital, incredibly secure, and running on code. It's where the big financial players come to move and settle huge amounts of value. Now here's the why, and this is really important. See, Ethereum's value isn't just about its coin, ETH. Not at all. It's about this massive, sprawling network that's been built on top of it. It's become the default choice for bringing real-world assets, like government treasury bills, onto the blockchain. And for institutional finance, that is an absolute game changer. Okay, so you've got this incredible digital backbone, right? But how does it actually talk to the real world? How does it connect to the traditional financial system we all know? Let's take a look at how that bridge gets built. The answer, according to the report, is Chainlink. It's positioned as the universal middleware. Basically, think of Chainlink as the ultimate secure translator. It's the go-between that lets the on-chain world of smart contracts understand what's happening in the off-chain world of bank data, asset prices, and, well, reality. And this quote, I think, just nails its importance. It uses the picks and shovels analogy. See, Chainlink isn't trying to be the gold itself. It's selling the tools to all the gold miners. It provides the essential plumbing that allows everyone else, banks, asset managers, you name it, to actually build in this new economy. But that leads to the next logical question, doesn't it? It's one thing to move data across that bridge, but how in the world do you move a physical asset, something tangible, like a government bond or a piece of real estate? How does that cross over? And the report's answer is Ondo Finance. It's a pioneer in what's called real-world assets, or RWA. And what Ondo does, its whole reason for being, is it takes super secure institutional-grade assets, like US Treasury bills, and creates a digital twin for them on the blockchain. And here's why that is a massive deal. Ondo is building a safe, regulated on-ramp. By playing by the rules, it's opening the floodgates for all that conservative, institutional capital. We're talking trillions with a T, to finally step into this new digital world with confidence. It's the bridge built for the really big players. All right, so we've covered the big money, the institutional backbone. But let's shift gears now and talk about what's going to power the stuff you and I might actually use. Consumer apps and, of course, AI. And this is where Solana comes in. If Ethereum is that heavy-duty settlement layer, Solana is positioned as the absolute powerhouse for consumer apps. It's built for speed, blazing fast, super cheap transactions. It's perfect for consumer-facing apps or this really cool area called depends, which, by the way, is just a fancy term for real-world hardware networks, like sensors run by a community on the blockchain. And look, the reason this matters is simple: user experience. For crypto to ever really go mainstream, it has to feel fast and easy. It can't be clunky and expensive. The report basically says that Solana, especially with new upgrades, is the only platform that can deliver that smooth Web 2-like feel that we're all used to. It's where the next Facebooks and Ubers get built. And you can't talk about the next wave without talking about AI. So let's look at the Artificial Superintelligence Alliance, or ASI. Now get this. It's not trying to be an AI itself. Instead, it's building the infrastructure, kind of like an open market where different AI agents can buy and sell data and services from each other without a human or a big company in the middle. This is so incredibly important because, let's face it, right now, a handful of giant tech companies control AI. What ASI is trying to do is create a decentralized alternative, an open marketplace that can't be censored, that protects privacy, and that just makes the whole AI economy a lot more fair and resilient.
Okay, so we've met the key players, but let's pull back for a second and ask the big question. Why is this all happening? What's the fundamental driver behind this entire shift to a new digital economy?
Well, let's start with a number, just to put this in perspective. $16 trillion. That's the estimated size of the opportunity in just one piece of this puzzle. So yeah, this isn't some niche little tech trend. This is the rewiring of the entire global economy.
The report really boils down the why into 4 massive drivers. First, the digitization of value. Simple, right? The internet put all our information online. The blockchain is putting all our assets online. Second, programmable efficiency, which just means you can automate finance and cut out the costly middlemen. Third, it's a hedge against inflation. In a world of infinite money printing, these networks have real, verifiable scarcity. And fourth, and maybe the most important, democratized access. Suddenly, anyone with an internet connection has access to financial tools that were once reserved for the super wealthy. So when you boil this whole 2026 report down, what's the one thing to remember? It's pretty simple, really. First, stop looking at just the currencies and start looking at the infrastructure, the picks and shovels. And second, the report suggests a strategic approach involves a mix of those big foundational blue chips, like Ethereum and Solana, alongside those specialized utility leaders that are solving critical problems, your Chainlinks, your ECs, and your Ondos.
And that leaves us with one final massive question to think about. If all of our money, all of our assets, all of our stocks and real estate, if all of that is just becoming digital information, then what is the true value of the decentralized networks that are built to secure and transmit it all? That right there is the multi-trillion-dollar question for the coming decade.